Okay, welcome everyone. I'm your co-host. Well, welcome to Black Man Speak. I'm your co-host, the J.R. Stewart.
And I'm your co-host, the Tommy D. Duncan III, otherwise known as TD3 Jimmy. It is Wednesday, June the 7th, 2023. If it's Wednesday night,
It's certainly Black Men Speak. So let's give a big shout out to Liquid for providing our theme music. And if you like the show, please do us a favor. Hit that like button, hit the notification button, subscribe, and invite a friend. Now, you don't have to do it in that order, but you need to get all four of those things done. And Tom, we have another exciting lineup for our guest tonight. So why don't we waste no time and jump into it?
all right, folks, we have a jam-packed show tonight. We have one of our very special guests and subject matter experts who will be joining us again this year, famed CPA, the John R.
The John Ward, yes.
Exactly. He's going to talk to us again about the IRS and taxes. We ran out of time a couple of months ago, and we just decided to have him back after he got a little reprieve from, of course, tax season. So we're going to have him on tonight. So make sure that you call in or text in on the chat line, which is now open for all of your
And Tom,
IRS
when we
and tax questions.
publish the number for people who can see it.
Okay, good deal. So if you need to, if you decide you want to call in at 385-526-5245.
And let me say this about our phone number. You can call in, of course, and be connected to the show. But Tom, we have an AI bot called Elizabeth, who also answers our phones. She answers our text messages and does a bunch of other stuff for us behind the scene. So, people, if you want to be notified when we have new shows and be given the agenda for the show, you know, text OPTIN, the word opt in, to our phone number that's listed there, and we will put you on our phone list.
Yes, absolutely. So we're going to go ahead and get started with the
Let's
show
get started.
tonight. We have a couple of news briefs that we're going to provide some updates on, a couple of new items, and then a couple of follow-up items that we've discussed in the past. And we're going to go ahead and get the ball rolling. First, we are going to talk a little bit about the NBA, and then we're going to talk about a couple of community news stories that we think should be important to you. First, we'll start off with a little community news. On a story, Jimmy, we did a while ago, had a special guest from Jackson, Mississippi to talk about
We
the,
had two guests. It was a husband and wife team.
you are correct, to talk about the water crisis there and the issues that probably everybody who's, living has known around that they've been dealing with for the last couple of years. Well, it looks like the citizens of Jackson, Mississippi, will fortunately getting a shot in the arm pretty soon, I think to the tune of about $115 million to help repair some of that infrastructure on the water systems.
Well, that's it's very good news, Tom. And I hope the people there, one, don't waste the money. There's a good chance that hopefully there'll be more money coming in the future. But in the event there isn't, make sure you get as much mileage out of this money as you possibly can.
Absolutely, Jimmy. And I believe there is about somewhere on the tune of about $600 million that's supposed to be coming from the federal government, the Biden administration, I believe the environmental protection area, to help fix all of the water pipe issues out there. So we definitely know that they can't get
Well,
that.
Tom, we know how that goes. Though. I mean, the city of Dallas, which well, you live in, but I live near. I mean, back in the day, they raised $320 million from bonds to develop the Riverwalk corridor over there. In the end, all we got out of $320 million was a $72 million bridge. So we know how money can be spent on environmental studies and impact studies, and God knows what else they waste money with. And in the end, very little of it's left to actually do what you intended to do. So my advice to the people of Jackson, Mississippi, not that my advice means anything, but for what it's worth, make sure that you do not squander this money thinking that more will be coming. Make sure you get the most out of these dollars that you can. So don't spend it on impact studies. If you need an impact study, call me. I'll do one for you. And I'll only charge you $10 million instead of $50 million.
Gotcha. All right, let's go to our next story, Jimmy. Something that actually happened a little while ago, but was just reported in the USA Today. I noticed there was a family, a very historic family in Chicago, A lady by the name of Sandra McWhorter Marsh of Chicago donated a the entirety of her cookbook collection of more than 1,700,000 cookbooks to the Washburn Culinary Institute at Kennedy King College. I mean, I saw this and I was absolutely stunned that somebody could have this many books, much less cookbooks. But she is 83 years old, and unfortunately, Jimmy, she's reached that age where she can't really use it anymore. She's had some issues with, I think, some pressure on her brain, and so she's not able to do the cooking that she used to. And so, in order to preserve that culinary culture from within our ancestors, she has donated her entire library through this culinary school.
Well, that's a very good thing, Tom. And let me say this to the fellows out there. Guys, if you're involved with a woman who doesn't have a cookbook or a recipe box that she keeps her recipes in, move on. That's all I'm going to say, Tom.
Move on, Jimmy.
Move on, Tom, because if
Gotcha.
she can't cook, I'm telling you, there's a lot of other things that are going to be missing also. And cooking is one of the very first skills that a young lady learns on her way to womanhood. So if you skip that step, you probably skipped a few others along the process. And Tom, all I'm going to say is women who do not cook, who think reheating Boston Market is cooking a home cooked meal, they're probably going to be lacking in some other areas. So congratulations for the donation. And so I hope that that this library is preserved. And but on top of that, I hope that there are people out there that can take advantage of the donation by opening the books and learning some recipes, taking them home and experiment with them and learn how to cook.
Right. This is true, Jimmy. They'll actually be going to a culinary school, so obviously they'll be taking advantage. And the interesting part is she is the great great granddaughter of a gentleman by the name of Free Frank McWhorter, who was an enslaved man who bought his freedom and his wife's freedom and settled down in southern Illinois. After he bought his wife's freedom in 1817, he bought his freedom next, and over 16 of his family members out of slavery into freedom.
It's a very good story. It's a good legacy, Tom. And unfortunately, a lot of our people and ancestors had to gain their freedom that way. It's a long, slow process because they were not allowed to keep very much of the money that they earned. A lot of
Yeah.
times, their masters would pimp them out because they had skills, but take most of their paychecks. So
Yep, absolutely. So, Jimmy, that's a great story. I
it
love to
is,
hear that, and of course, we definitely hope those young people take advantage of that treasure.
especially the women. Yes.
Well, Jimmy, for what it's worth, a lot of the most famous chefs are guys, and so there are a lot of men out there as well who are chefs, and a lot of the probably some of the most
Well, Tom, I
exclusive.
mean, most of the folks I know who cook are men. You cook, I cook. My grandmother and mother taught me how to cook growing up. And my grandmother told me that one day I need to learn this because one day you may grow up in a world where women don't cook. I didn't believe her. Little did I know how much of little did I realize she was a prophet for seeing the future. Only if she could have gave me a stock tip on Google.
Gotcha. All right, Jimmy, let's move on to our next couple of stories. We have a couple of sports stories, Jimmy, want to make people aware of. As we had talked about probably a week or so ago, that Monty Williams got fired from the Phoenix Suns,
Yes, he did.
after leading them pretty deep into the playoffs the last
For
couple of
just
years.
having winning season and getting them to the playoffs. Yes.
And they ended
Uh,
up losing to the Denver Nuggets, who are now in the NBA finals. But he ended up getting picked up and hired by the Detroit Pistons, who made him the highest paid coach in the
Well,
NBA.
Tom, he needs to be because he doesn't have much to work with there, and hopefully he can turn it around. So we'll see. Time will tell, but I hope that they give him, in addition to rewarding him with making him the highest paid coach in the NBA. So I hope they aggressively go out and recruit and sign the talent that he needs to turn that program around.
Well, they signed him to a 6-year deal worth, from my understanding, about $78 million, and it could go from 6 years to 8 years and pay him up to $100 million with incentives.
Okay.
So this is a nice opportunity for him. I think that he has done quite well in the NBA. He is one of about 50% of the black head coaches in the NBA, and he's got his work cut out with him. Cut out for him with the Detroit Pistons. So we definitely wish him the best of luck.
Well, Tom, if only the NFL could follow suit.
Good luck with that one, Jimmy. Good luck with that one, with the NFL in particular. And let's go to another story, Jimmy, that just came up today. Kind of interesting. We've reported on this one as
Problem
well.
child,
John Morant is back in the news again.
aka problem child.
Yeah, a couple of weeks ago, I think had his sixth incident, not so good, where now we talked about this a couple of weeks ago in mid-May. His camp is now claiming that the gun that he was caught with in a car hanging out with his buddies that went viral was so-called a fake gun. And they are, I guess, trying to change the narrative on this. And if that was the case, Jimmy, if this happened 3 weeks ago, why is this just coming up now?
Well, Tom, it takes a little while to spin a story. And so he probably doesn't have the best publicists and spin masters. So they probably should have called someone like me. I probably could have gave him a better story to throw out there to get the press off your back. But here's the problem, though, Tom. He's a young man with lots of money and he's being foolish. So that's reality, and that's not a good combination. So either he needs to find someone that can pull him to the side and straighten him up, let him know when he's being foolish. Because right now, I mean, he's jeopardizing the future. He's already lost millions of dollars that are
Millions.
not coming back. And I know, right now, he says in his world, he's young, he's talented. He figured that this is going to last for a while. He's going to make a lot of money. So what if I lose 10, $20 million today? Well, you know what? Eventually that mindset will cause you to be broke. You know, Mike Tyson had that kind of mindset. He was young, made a lot of money, $500 million over his
Short
career, and ended up broke. So you keep thinking that this money is going to last forever. It doesn't. Once you spend it and it's gone, or you give it away, it doesn't come back. Nobody's going to be lined up to give him $200 million over 5 years once his career is over with. So he needs to make sure he gets a good team that will protect him in the long run. So when he's 30, 40, 50 years old and no longer play basketball, that he still has some wealth that he can survive on. Else he's going to have to get out there and get a job.
And the reality of it is, Jimmy, there is a lot of talent that comes out of high school and college every year. The
Every
next
year.
LeBron, the next Kobe. And the thing that we talk to our young men about is that
And don't forget that European League, Tom.
I understand, but when we talk to our young men about this, there's a lot of talent that comes out every year. I think we talked about this a long time ago. You're more likely to get struck by lightning than to make it in the NBA. And so you've really got to understand that you got to understand the game that you're playing in, and you got to understand the rules of that game. It doesn't matter how much talent you have, because there are tons of kids that come out with talent every year, but you are one injury away
True.
from losing all, and in some cases, one boneheaded decision from losing it all.
True. That is true.
So we certainly, hope that things turn out okay for him. I think Adam Silver is going to have to lay the hammer down on him to get a message, not just to Ja, but to anyone else out there, in my opinion, who's thinking about doing something that doesn't align with the values of the NBA. He's got to send a message just not to him, but
I
to the entire league.
understand, Tom. I differ on this. I think the NBA should leave it alone. I can understand Nike and Powerade dropping them, because they really are in the image business. Not that the NBA is not, but he didn't do anything illegal. He's in a state where they have a right to carry. So maybe it's not the wise thing to be waving a gun and flashing a gun around your friends. It's not the right image. But since he didn't do anything illegal, I would think that the NBA should just leave it alone. That would be my opinion. But
That's not
I'm
going to
not.
happen.
But I'm not the commissioner.
Yeah, that's not going to happen, Jimmy. I mean, the thing about it is, when you talk about the partnerships that the NBA have, billion-dollar corporations,
Multi-billion, yes.
they're not going to go for this.
Right.
They're not going to go for this.
So,
That's
so
the problem. It's
you've
not
been
even,
right so far, Thomas. I'm going to defer to your judgment.
yeah, it's billion-dollar corporations who are going to be weighing in on this one. So, all that being said, man, get your head together, mature, get the right people around you. And I think, obviously, he needs to make some decisions as to who his friends truly are. Because if they were truly his friends, they would say, no, man, you don't need to do this.
True. That is true.
This is not you. Number two, there's too much money that you're losing that impacts us too. Put that down, get your head in the game, and focus on your career and stop all this playing.
Well, Tom, if you don't have the right person, he can always reach out to me and hire me. I'll be that person. I'll carry a billy club with me because every now and then I may have to bop you in the head to knock some sense into you. But I will make.
Are you talking about the homie don't play that bop you in.
Yes, yes. And I would make sure that you don't do anything foolish. I will be with you 24/7 if need be to make sure you don't do anything foolish.
And for those young folks out there, that goes back to In Living Color. The homie,
Yeah.
homie the clown, homie don't
Homie,
play.
don't play that.
All right, Jimmy. And I think the last thing we didn't get a chance to talk about it, we'll do this real brief. Of course, the NBA Finals. Game 3 is tonight. It is
Yes, it's on
1-1
right now.
between the Denver Nuggets and the Miami Heat. The game is 1-1, Jimmy. And we've talked about this a little bit. You know, the Nuggets are definitely juggernauts on the offensive side, but, you know, we'll see what happens. You know,
Well, Miami stepped their
Eric
defense up
Spoelstra
in game
is
two.
starting to change the lineup.
Yeah, I mean, Miami stepped their defense up in game two,
Yep,
and they scored.
yep,
So I believe it was 111 to 108.
yep,
So you have to consistently score over 100 points with Denver
yep.
because they can easily put up 120, 130 a game, and so to hold them to under 110 was surprising to me.
Well, hey, Jimmy, they
But you
did it
got
in
to
both games. I think it was 104 points in the first game and 108 in the second. So they held them to under 110 in both games 1 and 2.
So that says a lot about their defense, and they scored in game two. So let's
Yeah.
see if they can keep it up over a 7 game series. But Tom, we have one more comment. And I'll be brief.
Okay.
You know this is Gay Pride Month,
Okay.
and I just want to say I don't care about who you love, who loves you. I'm not trying to police you in the bedroom. I don't care about your pronouns. I don't care how you identify yourself. You know what? Live your life, be happy, but keep it to yourself. Leave the kids out of it, and don't do parades going down the street, with naked people being whipped in the ass showing. And it's just too much. I mean, this whole alphabet community is going a bit too much with their expression.
So
I mean,
what is, I don't understand what is your message regarding
my message is I'm hoping if you have friends or acquaintances or family members who are part of that community, someone needs to just tell them that, hey, you can do your thing and be you, but keep it to yourself. The rest of us don't want to be exposed to this.
well
We don't want our
but
kids exposed to this.
but
We don't
there's
want
something
drag queens
called
doing story time in elementary school.
but there's something called freedom of speech,
There
Jimmy.
is something called freedom of speech, Tom. But
That
you know
applies
what?
to everybody.
Freedom of speech is predicated on political free speech. It is for you to be able to speak out and express your appreciation or your lack thereof for your government. It was not for you and me necessarily to be able to walk and say whatever we want to say. There are still limits on speech when it comes to society. You can't endanger people with your speech. And what they're doing with their speech is endangering our kids with this nonsense. They need to stop. I'm not saying that in private circles you can do whatever you want to do, but keep it away from the kids. Keep it out of the public sight. Be you. Nobody's stopping you from being you, but just keep it to yourself. Keep it to your community. I don't want to see it. I don't want to hear about it.
Are you saying that they shouldn't have parades? What are you saying?
Well, I'm saying if you're going to have a parade time where kids are going to be attending, these parades are not limited to adults. But you're going down the street. I mean, one of the videos I saw was one of the floats was one guy spanking another guy with a whip when his ass was out. He was just bent over, being spanked with his ass all out. I mean, that's way too much. It's overboard. Is what I'm saying. At a parade where you have kids, having drag queens and show up at to read books to kids at story time, to me is a little bit too much. These kids should be going to school and learn how to read, write, and do arithmetic, not be asking questions about sexuality. There are some things that should be taboo for our kids, and that's one of them. And these folks seem to be hell-bent on exposing our kids to this nonsense, their lifestyle, to indoctrinate them. And that's where I draw a problem with them.
Gotcha. All right.
So let's move on.
All right. And before we move on, I think next we're going to have our CPA and tax expert, John Williams, on, but we want to acknowledge a couple of our guests who are on the chat line. Ms. Audrey K. Booker, we want to thank you for joining us. Good evening to you. And Ms. Faye Fleming, our actually.
Hey, it's in the house. Okay.
Exactly. And she's been on our show before. So we want to thank her as well. And she actually brought us something a little bit earlier. She said, in reference to your comment, Jimmy said, shall we also pass on men who don't cook or cut the grass? Inquiring women want to know.
Yes. If he's not an alpha male, if he's a beta or a gamma, leave him alone. That's my advice to women. Only associate yourself, have children, and marry.
Might know how to cook, Jimmy.
Well, I mean, alpha males generally know how to cook, Tom. They know how to survive.
Gotcha.
You
All
know, in the
right.
case that their spouse is sick or down and someone needs to make sure the family is fed, alpha males will step up.
Gotcha, gotcha. And hey, also, I want to make sure that I mention, brother Asar Al Kabelan is also on the chat line as well. We want to welcome him. And Jimmy, if you did not know, I think you probably already saw this. One of our fraternity brothers, Cornell West, has put his hat in to run for president in a third party political party. So for those of you who are not aware of that, I thought that was pretty interesting news. I think with that third party has no shot whatsoever, but maybe he's just trying to get a message out.
Well, Tom, I wish him luck and congratulations for throwing his hat into the race. But I will say this: if Brother West is out there listening somehow, I just want you to know that that title of being the smartest black man in America belongs to me.
All right, Jimmy. In that case,
Okay,
let's go ahead and get to the rest of our show. In the next segment of our show, we now have our resident
Brother
guru,
John
tax
Williams.
expert, and IRS
Yes.
manager extraordinary, Brother John Williams. Welcome, welcome, welcome. We want to thank you for coming on tonight. How's everything
Thanks for
going?
having me. It's
Yes,
going
it's a
good.
great
Thanks
honor.
for guys for having me on tonight. I think
Absolutely.
this is what
We want to
maybe
appreciate you
my
joining us.
third
We ran
time
out of
I'm
time.
appearing. So
Absolutely. We ran out of time the first time we had you in March, and then we agreed to have you back on after tax season was over with. So we've got to talk a little bit more about money, taxes, and the IRS, Jimmy, because our inquiring minds definitely
Well,
want
we
to know.
certainly got to pick up where we left off, Tom. And so I'm curious to know that, I mean, what's the rule now? Did IRS relax the rule on this $600 money transfer and having to report it?
We were
Uh,
talking about that.
yes, there was a lot of
okay.
confusion over that. And my daughter, who uses those cash apps to move money around with her cousins and friends, receiving and sending, she doesn't know what to do as far as filing. So you need to help us
Okay.
out here, John.
Okay. Well, bring you up to date. So the last time we talked, the law that was passed was that essentially anyone who received money through one of these third-party payment systems, PayPal, et cetera. If the amount exceeds $600, they would receive a 1099K. And so that rule was temporarily put on hold because of the uproar, and a lot of people essentially said, hey, we're not ready for this funding standpoint. And so unless something between now and the end of the year, if you received at least $600 through one of these payment apps, you will be receiving a 9K for 2023.
So, John,
Um,
how to report
I
that this is a
like,
loan? If this is you simply pay me my
yeah.
money back.
So okay, so I'm glad you asked me that, Jimmy. So on,
And,
I would
and John,
assume
why don't
all
we
of
do
the
this?
payment
Why don't we do
I
this?
know within Vimo.
Um,
Did I lose you?
John, we can. Yeah,
yes.
you went off for a second. So if you could kind of start about maybe the last 15 or 20 seconds because you
Oh,
went
okay,
dead for a
okay.
second.
So yeah, so Jimmy, I'm glad you asked me that question. So within the payment processes, within the software, there is, I know within Venmo, there is a button that you can select to indicate if the payment is business related. So let me back up. So if you have a business profile in one of these payment apps, uh, transactions that occur under the business name will automatically, generate a 1099K. I mean, 1099K. If you are basically, if I'm just sending money to Tommy for Ranger tickets, I can indicate that that is for personal reasons, and you should not be receiving a 1099 at the end of the year. So I don't know if that is the case across the board,
Okay.
And there's still going to be some kinks that needs to be worked out because let's say if you don't have a business profile in PayPal or Venmo, well, you could still be transacting business transactions even if you don't have an official business set up. So they
True.
they still need to do some work between now and the end of the year to distinguish between what transactions are, business and are not non-business. So, let me give you one reason why this is a big deal and one reason why it's not a big deal.
Okay.
So, for uh, individuals who are not transacting business, well, you don't want to receive one of these because if you receive one of them, unless you go to through the process of either having that the payment processor corrected or some kind of way figure out how to adjust it out on your tax return, you're going to have to pay income on this money. So that's a big deal because if I'm paying Tommy for Ranger tickets, I don't want to include that in my taxable income. So that's why it is on one hand a big deal. You don't want non-business transactions to be treated as taxable income. Okay, on the business side, why this is not a big deal is because transacting business, it doesn't matter if you have sold $10,000 worth of goods and services or $500 of goods and services, you're still obligated to include it in your total income.
Right.
So for individuals, yeah, you don't want one of these 1099s to slip through, and you either pay tax on it or you don't include it in taxable income, and then the IRS sends you a letter 6 months later saying, hey, we made an adjustment to your tax return, you now owe us X amount of dollars. But for business owners, regardless as to whether or not you receive a 1099K, you
It's all
are
part of your P&L. So,
yeah, that should be part of your P&L. Or
okay.
if you're an individual, someone that's operating a business out of your garage or doing some part-time work, it should show up on your Schedule C, at tax return. So, but for now, to answer your question, unless the law changes, unless the IRS has a change of heart between now and the end of the year, anyone who received $600 or more and it was business related for 1099 for during the year, you'll receive a 1099K for 2023.
And this is going to happen, or this is happening now.
This is going to happen unless the law is changed. So, obviously the 1099 deadlines are not normally they have to be processed by the end of January, and sometimes the IRS will stagger the due date depending on if like when we were in COVID, they gave us some extra time and whatnot. So if there's if there's still some confusion, which there is confusion around the topic at year end, we may see them push back the law change again. But my feeling is that it's going to stick this time. They just, they're going to have to figure out the payment processors. They're going to have to figure out internally how they can distinguish between business transactions and personal transactions at a high degree of certainty.
Gotcha.
Okay.
We do
So,
have a question, Jimmy, from
go
one of
ahead.
our listeners, Ms. Faye. She says, "How can you get tax benefits for pro bono consulting work through your company?"
So, what would be an example? Give me an example, Tommy.
Well, maybe it's business consulting.
But she didn't
That
charge him. She donated her service.
exactly.
Well, that doesn't have a tax impact, I would say, on a business impact. I mean, hopefully by
And
donating those services, you're going to
she is an
you're
entrepreneur. She is an entrepreneur. So this is something
yeah.
that I believe she does for a business. So if she does some pro bono work, for nonprofit, for profit, or whatever the case is? Are there any tax
Well, for the
benefits?
nonprofit, it's easy because they can write off the value of your service. But for a, let's say, a
for
non-nonprofit, it was a business for profit that she donated service to. Well, John would probably have to answer that one.
Yeah, yeah. So no, there's not, other than simply having the exposure. Hopefully, since they're not paying you, they're in their literature, if they're doing a seminar, if they're doing a webinar or something like that, hopefully there's some exposure that they will give you in terms of letting the audience know that you contributed to the program, or to the gathering. So in an indirect way, yeah, but from a tax write-off standpoint, there wouldn't be a
And so in
tax
this
write-off.
case,
Hey,
what she
hey,
said
John,
it would be
I'll-
free research for a nonprofit. So
let me throw this at you, John. Could she possibly just invoice the company and then just write it off as non-payment at the on her taxes as a
Well,
loss?
so here's the deal. So if you invoice the client, it goes into income. If you never collect, if let's say in a situation where it's the client simply doesn't pay, well, you can take a bad debt write-off. So it's basically a wash. So no, there's, I would say the best case scenario is if you did some type of bartering, almost like a bartering transaction where you invoice them and they pay you back. But that doesn't sound like that's in the realm of
right. What
possibility.
she's
So
doing is she's doing free research for free for a nonprofit in this case.
yeah. So
Well, if it's a
no,
nonprofit that's a 501c, they should be able to give her the right off, shouldn't they, John? I don't know what the form is, but um, I know in my company I received some for in-kind gifts that I've donated to nonprofits for us to include with our taxes.
yeah. Well, I know that obviously the material items count, but in terms of services, there's not much you can do there in terms
Mm,
of having a write-off.
okay.
Gotcha. Looks like there's another question. We want to welcome Ms. Celia Reese. She's on the chat line. She said, is there a way to set up an account so that it is not set up as a 1099 example when collecting funds for a donation?
Yeah. So going back to what we were a few minutes ago, what we touched on is within the payment processor, there should be a button or a drop down selection that you can choose when you set up that account, or on a transaction by transaction basis, to where you indicate that uh, this is not a business transaction. So
Mm,
I don't have one of those accounts. So that is that I believe they're still going to have to work on that application, because there has to be some kind of way that they can verify that the transaction is personal, because if not, you're just going on the honor system.
right.
So that's something I can look into in terms of where the three top payment processors stand in terms of how they internally plan on addressing this issue. But yeah, my understanding is that you can choose within the systems or you can indicate whether or not the transaction is business or personal. However, if you have a business account set up, you're automatically going to receive a 1099 K, because the processor is basically has your profile set up that you're a for-profit business, and they will treat you accordingly at year end.
So if you are not a business entity, and let's say you loaned or granted $1,000 to your daughter or son or whatever the case is to get the car fixed, but it wasn't income, to them per se, or just something. What do you do to help manage this when it comes down to the government sending you a 1099-K next year to say, hey, this is
Well,
not income?
well, if some kind of way one of these 1099 slips through, the first step would be to really the only step at this point would be to go to the vendor, the processor, whether it's PayPal or Venmo or what's the
Zelle?
Zelle, which is you know, a lot of people use that. So the first step would be to go to them and indicate that this is an error. So what normally happens is these forms are generated at the end of January. And so depending on when you process your taxes, when you prepare your taxes, if you think that there's something floating around, I would wait unless some people like to file their taxes middle of January, you know, if they receive their W-2. But if you have one of these accounts set up, my advice would be to wait to at least wait to like the 10th of February to see if you're going to receive one of these forms by in error, and then you'll need to go back to this payment processor and indicate to them that they need to correct it. Because if it's not business related and it's not corrected and you file your tax return, the IRS is going to knock on your door or put some mail in your mailbox probably 5 to 6 months down the road, saying that that their system's different from your system, and they believe that you owe income
Yeah, you
on.
don't want them pit bulls calling you,
Yeah, yeah,
writing
yeah,
you.
yeah,
Right.
yeah.
And
And
we got
if you do receive that letter, I'm not here
Give
to.
John a call.
Yeah, I was about to say,
Don't try to deal
I'm
with it
not here to
yourself.
pump. I'm not here to pump myself up. But whoever if you prepare your taxes or someone else does, if you receive not only a 1099-K letter about that, but any type of tax notice, don't just throw it in a drawer and ignore it. Because I've been working with the IRS. Yeah, I've been working with the IRS uh, over 25 years, and so they take a totally different approach when you're proactive and you reach out to them and you indicate them, and a lot of times and sometimes they're incorrect. They're not, they've
Sure.
made an error. But what you don't want to do is ignore the IRS. That makes them they don't like that. So, and in the end, even if you win, a lot of times you'll win, but you have to reach out to them or have a professional like myself, contact them on your behalf.
So
One
John,
other thing that I wanted to
oh,
say about the
go ahead.
1099 is not just the 1099-K, but in any 1099 that is business related. What a lot of people need to realize is that, what comes to mind is a lot of the Uber drivers and the food delivery drivers, is that the income that's listed on the 1099 is business income, so you are allowed to deduct business expenses. So when you're preparing your tax, especially if you're preparing them yourself, you don't want to overlook this. And I don't mean, obviously I'm a pretty conservative guy, so I'm not, I take the straight and narrow. So they're expensive. If you're a driver, you have your mileage expense, which now the standard mileage rate in 2023 is now 65 and a half cents a mile.
Oh, that's pretty
So
good.
that's pretty good. I mean, I remember just recently when it was, maybe 5 or 6 years ago, when it was as low as 52 cents a mile.
Well, that's why
So
them
like,
pay
so
the work off of W-2.
yeah. So let's say if you drive 10,000 miles a year and it's business related, that's $6,500. That is a business deduction. So always keep in mind that, no matter, what type of business you're in, if you have what the IRS calls reasonable and business expenses, those expenses, reasonable and necessary business expenses, they can be written off on your tax return.
So, John, I want to throw another question at you about 1099. So, if you're working off a 1099 and you negotiated with your client to pay some of your bill rate on a per diem basis, and you
Okay.
push some of your money into your corporation, only pay yourself absolutely what you need, and you take all the business deductions that you can.
Hmm.
Can you map out like a good strategy for people who may work off a 1099 on how they
Well,
can limit their tax liabilities?
well, in terms of businesses, um, you have a couple of ways that you can receive the income. If you have a LLC, or if you operate an S corp.
Core S corp, yes.
Okay, so what's going to happen is, if you have an S corp, the 1099 is distributed to the S corp and not you personally. So within the S corp, you have all your you have your income, and then you have your expenses. And then if you own an S corp, basically your income will come in one of two ways. It's either going to come on a W-2 that you pay yourself. You're an employee of the S corp, so you issue yourself a W-2, so you'll receive that income stream. And then whatever your bottom line profit is for the year, assuming that you're the only shareholder in the corporation, you'll receive a Schedule K-1 for either the income or the loss from the business. So when we go over to your personal tax return, we have the W-2 income, and then let's say if you have a $50,000 loss from the business, that loss wipes out, or it offsets any W-2 income plus dividends, interest, capital gains, whatever your other sources of income is. And then if you have $50,000 of income, obviously the business that gets rolled up into your personal tax return. So
And per
I'm sorry.
diem?
Well, the per diem is really paid that's an expense at the corporate level, and so that gets backed out at the S corp level, and then whatever the net income from the business is, it gets passed on via a Schedule K-1 to the individual shareholders.
And as far as the balancing act, I mean, I assume that there is some magic numbers of how much you pay
Well,
yourself, how much profit
well,
you have, and
well,
loss that you
it's
have to
good.
balance
It's
out with
good
your
that
accountant.
it's it's good that you asked that, because it's not really a balancing act. So, not to get too deep in the weeds, but so the reason that most individuals set up S corps is it gives you the ability to minimize self-employment taxes. And so what that means is that any uh, uh, basically Social Security and Medicare is what we're referring to. So what some individuals would do 10 or 20 years, maybe 10 or 15 years ago, they would set up an S corp and not pay themselves any salary, which is a no-no. If you own a S corp, but you don't work there, you don't have to pay yourself a salary. But the IRS says that if you own a S corp and you are performing work for that corporation, you have to pay yourself what's called a reasonable salary. And so essentially a reasonable salary would be, in most cases, whatever you would pay somebody off the street to perform the duties that you perform for the company. And so, but there's not a table or a manual that you can go to and say, I'm running a manufacturing company. I'm a single member owner of the S corp. This is what my reasonable salary should be. So it's basically, you need to kind of work with a professional, look at what the prior history has been in terms of industries and businesses in your industry with certain levels of income. But the thing about it, and I don't want to speak too passively about the IRS, but if you pay yourself something, I mean, if you make
minimum wage,
yeah,
CEO.
let's say if you have a net profit of $250,000 from the business, and you're the only shareholder, I mean, if you're paying yourself, $40 or $50,000 on a W-2, and then you take the rest of it just as a distribution, I don't want to, like I said, I don't want to say for sure what the IRS would do, but I'm saying you're probably never going to have any problem with them. But in that, obviously that varies on a case by case situation in terms of, how many shareholders are in the business, who all is doing the work, what the difficulty of the work that's being done. So there are a lot of subjective items that you have to look at when you're trying to figure out what a reasonable salary is. But what will get you in trouble is if you, year after year after year, if the business is showing a profit, and then on the tax return on the 1120S, it has a line and it says, this is what amount of wages did the shareholders and the owners take? And if it's zero, if I was an auditor, if I was a 24-year-old guy just getting out of Texas A&M, and I was auditing tax returns, that would be pretty easy for me to spot as an oversight. So that would be my recommendation. In terms of LLCs, if you operate an LLC and it's not set up as an S corp, all the income, all the pass-through income will be subject to self-employment taxes, with the exception that each year the IRS adjusts the maximum amount of wages that are subject to Social Security. This year, because of the leap in inflation, the rise in inflation, the amount jumped to, I want to say, I have to look up the amount for 2022, but it had a huge jump. So now $160,000 of wages, W-2 wages, are subject to Social Security tax. So you pay Social Security up to 160,000.
Okay.
The Medicare, that there's not a limit at all. So if you make $1 million for W-2 wages, you're going to have to pay Medicare tax on it. And so going back to my previous statement, if you're an LLC and you're not incorporated, I mean, if you're LLC, but you don't ever switch over to be an S corp, because you can set up an LLC and then convert it to an S corp. And I can give you all the reasons, but that may be a little bit too much for this show.
Right. We got about 10 minutes, John. So
okay, well, good.
Why don't we do this? I want to welcome Elisa Patterson to the show tonight. I want to welcome Marvin Jones. It looks like Bill
Marvin's in the house. Okay, Bill
just joined us. It says, it looks like this is a question. We're going to have to keep it tight because it's almost 8:50. It says, I have an S corp.
I know Bill, by the way.
Yes. I have an S corp and I paid myself a reasonable wage. The business does have income that flows to me on a K-1. What are some great tax strategies to lower the K-1 pass-through?
Well, I mean, the best tax strategy is you have to maximize the deductions on the corporate side before it passes through. So one thing, Bill, I would ask, or you might just check to see, do you have a SEP IRA that's set up on in the corporation? That's going to be one of the biggest advantages outside of your normal business expenses. That's going to be the one of the largest vehicles to minimize what's coming through on the K-1. we talked a little bit in previous shows about bonus depreciation and Section 179. So, yeah, Bill, I don't know if you have, I mean, almost all of us have some type of equipment purchase, whether it's if we're a CPA and we're buying computers, or, if you're a construction company and you're buying F-250s and heavy equipment. So that's going to be a big deduction as well if you have depreciation that you can take, accelerated depreciation on any of these any types of purchases like that. The law has changed up until 2022, or from 2018 to 2022, you could take 100% bonus depreciation, which essentially means that you instead of spreading out the depreciation on an asset, you could write it all off in 1 year. The law has changed now. In 2023, the amount went down to 80%. And then the bonus depreciation, unless the tax law has changed, it'll eventually go away in 2027. But so those are, Bill, a couple of things that come to mind when I think about business expenses. One other thing, Tommy, that I'll mention, and this is kind of getting off the topic of what Bill asked, but
Sure.
I wanted to throw this in because we still have some time, and we see a lot of commercials about the employee retention credit.
Yes.
So the employee retention credit, there's ads, if you watch any type of financial program, or not even sometimes a financial program, if you just listen to music, you'll hear the ad. So the employee retention credit was basically a credit that the IRS came up with during COVID to aid businesses that retain their employees that had a significant downturn in sales, but still maintain their employees throughout the pandemic. And so I would say two things. It is if you qualify for the credit, it's something that you don't want to let pass. I want to say off the top of my head, next March or April is when it starts to expire. But a word of caution, you'll hear a lot of ads from non-CPAs and really non-tax professionals who are being very aggressive when it comes to this credit. And so you don't want to get yourself in a situation where you're dealing with someone who's basically preparing a false amended tax return. They disappear, and then 3 years down the road, when the IRS, if the IRS were to audit you, they're not going to be around, and you're going to have to, try to get that worked out with the IRS yourself. So in terms of businesses, if you qualify for that, and then if someone has questions, Tommy, you can give them my information. They can, contact me offline about that. So I just thought I'd throw it out because you see a lot on hear a lot on the radio, see a lot on TV about the employee retention credit.
Okay,
Okay.
good. We have one quick
I
question.
think Miss Alyssa had a question
Yeah,
there.
she said, I started a nail shop LLC, but never opened the nail shop. What should I do? I got a tax bill, but never opened the business.
Okay, so if you never opened a business, probably what happened is you received a tax bill, if it's Texas, from the Texas comptroller. So for franchise tax.
Correct.
So what I would say is, if you're never going to close the business, you would need to, or have your tax professional prepare. Basically, there will be zero tax returns. Basically, there are tax returns that need to be filed with the Texas comptroller. You won't owe any tax on the return other than the late fee. So it's due every May 15th. If it's not filed on time, the comptroller will send you late notices. So for if it was open for 2 years, there's going to be 2 years of tax returns that are due. And then once those tax returns are caught up, you can shut the corporation down. And so it needs to be shut, or the business down. It needs to be shut down at the state level, and also closing it with the IRS. If there was no activity, essentially you would just write them a letter and say, hey, this business, I close this business as of X date, and they'll basically shut down that EIN. But if you do not plan to ever conduct business, it needs to be closed at the state level and with the Internal Revenue Service, because you don't want some kind of way someone getting that EIN and
Gotcha. And it looks like she did
pretending
get,
to transact business on your behalf.
right. She did get the comptroller bill, and I guess with these last 5 minutes, John, I don't know where the time flies, but we want to talk very briefly about tax planning. We're in June. I mean, we'll look around and we're in the fall. And I know that when we talked a little bit earlier, very briefly, since it's we got about 5 minutes left, about what kind of tax planning should we be doing now that we're mid-year?
Well, it depends a lot on your source of income. So whether or not it's personal or business also.
Okay.
So most Americans receive, W-2 income. So unfortunately, the primary tool for reducing taxes if you receive W-2 income is going to be not allowing it to get on the W-2 to begin with via contributions to retirement plans, whether that's a 401k or IRA. Also, if you're in a high deductible insurance plan, you can open up an HSA, and I'd have to check the limits because they adjust for inflation, but I want to say somewhere around, it's in the high threes if you're an individual. I want to say it's closer to 8 a year if you're contributing for a family. So basically, if you contribute to the HSA, it's tax deductible, and then as long as you use the funds when you withdraw them for medical purposes, you don't have to pay tax on them. So those are from an individual standpoint, you want to do your best to keep the income from actually coming to the tax to the W-2, which gets to the tax return. One good thing about this year is because of inflation, the tax brackets have been widened, so there is a chance, and the standard deduction has been increased. I want to say if you're single, it's like $13,850. So the one good thing about this year, if your taxable income is the exact same as it was in 2022, just for an example, you may actually owe lower taxes. Well, you would, all things being the same, you would owe lower taxes because the tax brackets are wider, and your standard deduction is higher. And 90% of all Americans post the Tax Cuts and Jobs Act of 2017 use the standard deduction as opposed to itemized deductions.
Gotcha.
Okay. Well, John, when you come back, I have a question that's going to take way too long for this last couple of minutes that we have. But I have a C corp. My wife has a nonprofit, and we want to get into that Clinton Foundation tax strategy.
Okay.
So maybe you could talk about how we manage that when you come back, or maybe we meet offline.
Okay.
But we'll definitely want to thank you for coming in and
Yes.
the wealth of information. And people, once again, this just demonstrates why the Black Man Speak is so important, because we bring on experts like John. And this type of information, I'm sure if you had to sit down and talk with John, the initial consultation, I don't know what it costs, but his expertise does not come free. So to have access
it's not as quite as much the shotgun approach tonight, because we like to hit a lot of topics to try to cover questions from different individuals.
But John's contact information is there. Please reach out to him if you have questions. Alyssa, definitely reach out to him for more information on your situation, if you need additional help, and everyone else. And also, if you just need someone to do your taxes, to review them, to make sure you're in good standings, reach out to John, because that's what he does over 25 years working with the IRS. So if you ever get that letter or phone call, you make sure you reach out to someone like John right away. Do
As
not
they
deal with
say,
those pit bulls by yourself.
there we
'Cause
go. Like they say, one call, that's all. All right,
so,
Jimmy. It is 9 o'clock.
okay. So thank you, everyone. We'll
My
see you
pleasure.
guys next week. And thank you again, John. And let's go ahead and close out.
Good evening, everyone.